I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Fed decision Wednesday morning. StubHub ringing the bell at the New York Stock Exchange to celebrate its IPO day. ACO getting things popping over at the Nasdaq. You can see friend of the show, Dan Ives, ringing that bell. I think he's the chair of that company. Good stuff down there with your pink outfit. All right, having said all that, the holiday officially has arrived for stock market bulls. It's Fed decision day for the markets, and those bulls that have sent stocks to fresh records this week are banking on big gifts from Santa J, or more formally, Fed Chair Jerome Powell. Markets expect the Fed to cut interest rates by 25 basis points and leave the door open for more rate cuts. Anything short of that will be a gift for, you guessed it, the bears. Such is life in investing. All right, let's get a quick check on the major averages as we kick off trading on this very important Fed day. Ali Canal is down for us at the Nasdaq. Ali, do you see Dan Ives down there in his pink outfit?
Yep. He stands out right down there, waving his hands, that NASDAQ bell opening on Wall Street here. We are seeing stocks open mixed. We have the NASDAQ down just slightly, but really hugging that flat line. S&P trading just above the flat line, and the Dow is up roughly 0.3%, or just around 150 points. So really wait and see mode for that Fed decision later this afternoon. Not only are we going to be seeing whether or not the Fed cuts interest rates, right now markets are pricing in 25 basis points, but we'll also be seeing the summary of economic projections, those revised forecasts. That maps out where policymakers expect interest rates to head in the future for the rest of 2025 and into 2026 and beyond. So that will be a big focus point. And speaking of the Fed, let's take a quick look at Treasury yields. Again, wait and see mode to see what this decision is, but you are seeing yields tick down slightly. You have the 10-year hovering right around 4%. You have the 30-year yield at 4.6%. We have seen this steady buying in the bond market as there are expectations that the Fed will begin its easing cycle. But then taking a look at some trending tickers, I'm looking at NVIDIA. NVIDIA opening up down just around 1%. Now this comes after the Financial Times is reporting that China's internet regulator has ordered top tech firms, including Alibaba and ByteDance, to immediately halt purchases of NVIDIA's AI chips and cancel existing orders. So once again, NVIDIA seems to be a pawn in the U.S.-China trade war. President Trump will be meeting with Chinese President Xi Jinping on Friday. I'm sure this will be a top discussion point here, Brian.
I'm sure it will indeed. All right, thanks so much, Ali. Appreciate it. All right, here's what I'm watching right now. Game time for the Federal Reserve. Virtually every sector you look at right now in markets, it reflects optimism. The Fed is about to finally embark on a series of interest rate cuts. Where do you see this mostly, friends? In many companies trading on record price to earnings ratios, even though they aren't producing peak earnings. This right here makes it critical. Jerome Powell gets the messaging today correct, not just in the Fed's press release, but during his Q&A session with reporters. One small slip of the tongue and Fed Day could turn into a sell the news event for traders. Tracking the AI trades around the world with good reason. President Trump has landed in the UK with First Lady Melania and tech leaders from the likes of NVIDIA and OpenAI. Tech giants are wasting no time making announcements that coincide with Trump's UK arrival. Mark Benioff-led Salesforce said it will invest $6 billion into its UK operations by the end of the decade as it looks to make the country its European AI hub. Microsoft said it's investing $30 billion in the UK between 2025 and 2028. As this is unfolding, China's AI stocks have ripped to new records as AI optimism spreads further. The Hang Seng Tech Index closed at its highest level since November 2021. Baidu and Alibaba seeing very strong sessions and interest on the Yahoo Finance platform. And crypto comeback, somewhat under the radar, Bitcoin prices have broken out of a trading range the last 5 days as the US dollar has reached a 4-year low. Crypto insiders tell me the crypto market is also readying another charge higher as the Fed begins to cut rates, which could cause even more pressure on the U.S. dollar. Lots going on here in markets. Here on the Opening Bid Roundtable, Kenny Polcari, Slate Stone Wealth Chief Market Strategist, and Yahoo Finance Senior Reporters Ali Canal and Inez Ferre. Kenny, coming right to you out of the block here. Hit me with some good trades into this Fed meeting.
So I think really, I think the markets had a good trade going into the meeting. Now they want to wait and see if that trade's going to work out, right? Is the Fed going to do what they think it's going to do, or is Jay Powell going to be maybe more cautious or not? So I'm just sitting here like you said, and we're waiting right now. If we see the market back off, if we see Jay Powell become maybe more dovish than what the market expects, that could be actually taken as a negative, because more dovish would suggest maybe he's panicking a little bit, maybe he feels he's behind the 8 ball, and then you could see the market retrace. And if it does, you can be sure that all the high flyers and the names that have really participated the most are going to be the first ones to get hit. Unlike, some of the other underperforming sectors like consumer staples or energy, healthcare, they would be less likely to get as hit because they're essentially flat on the year. The other ones are up double digits. So if you see any nervousness at all, that's where you're going to see money moving out of. I don't suspect you're going to see that. I think the market is well prepared for what it's going to hear today. I think it's expecting 25 today and 2 more by the end of the year, and potentially 1 in January to make a total of 100 basis points. If it veers off of that narrative, then I think the market will start to question it. But if that's a narrative we hear, or if that's what it sounds like he's saying, then I think the market will be fine. You might see a little bit of a sell the news event after the rally higher, but you're not going to have a panic sell the news event at all. You just have some people taking some profits and reallocating money.
Okay, let's assume massive optimism. I've been Debbie Downer all week on this Fed meeting, but you know what? Let's just take the other side of this, balance out my negativity. Let's say Jay comes out here, we get a rate cut, and he signals more rate cuts are ahead. We have those 3 dissenters at the Fed that would suggest they want an even larger cut. I mean, this market's going to open tomorrow. It's going to rip to records, right?
Right. Well, you think, listen, there could be dissenters either way. There are still some people on the board that think we should do absolutely nothing, right? So you have to take it all in stride. And I think we're going to hear that today. If you get more dissenters, or if you see the dot plot graph, which they're going to show today, if it's more scattered versus kind of moving in unison, that will also create some kind of anxious market. But if the market gets what it wants, listen, could it rally to new highs? It certainly could. Look, we're at new highs already, but don't be surprised if you get this kind of relief, sell the news type of event where people are just going to lock in some profits. Now, that doesn't mean we're going to get a crash, but it just means that, maybe you'll have a little bit of profit taking before we move higher into the end of the year. Either way, I am bullish on America, and I'm bullish on the market long term.
Inez, you're bullish too, right?
I am bullish. Look, I mean, there's been a pivot in what's happened here from April to now, and as some strategists have been noting, the administration went from we are going to cut our way out of this problem to we are going to grow our way out of this problem. So you have seen the markets going to all-time highs. Wall Street is still expecting this bull run to continue for the next 12 months or so. And that partly is because you're seeing the US dollar that's declining. That is inflating assets across the board. I mean, you are talking about equities, you're talking about commodities, gold, crypto as well. So you're seeing this sort of run it hot monetary and fiscal policy, and that's what's lifting assets right now. And what will be expected is that the Fed is going to start easing, and then subsequent rate cuts will come later. We'll see what the market reaction is once Jay Powell starts speaking.
And the rhetoric after this meeting, Ali, will be just interesting. Even if Powell and the Fed cut rate by 25 basis points, you could still have theoretically President Trump out there mentioning in the afternoon, Truth Social, various forms, whatever it is, saying that that's not enough. And I'm curious on what the market reaction would be to that.
Yeah, I'm curious market reaction, and I'm curious what we're going to see from the dot plot. This is the summary of economic projections. We last saw the dot plot in June, and in the June's projections, we saw a decent amount of dispersion there. Even though the majority of officials were forecasting 2 rate cuts to end the year, we did see 7 officials still wanting the Fed to remain on hold, still advocating for rates to stay steady where they were. I expect that to be significantly revised this time around. So how much dispersion will we see? Because we do want a Fed that is mostly aligned. However, we are in unprecedented times with tariffs making their way through the system. We know that inflation is still running hot. We saw some categories show sticky inflation, the tariff impact in the latest CPI report. But economists have consistently told us that it's going to take time for that to fully show up in the data. And then on the job side, clearly weaker numbers, but the unemployment rate is still fairly low. There's also the supply AI issues, with the immigration crackdowns. So there's a lot of different factors here that the Fed has to juggle. And that's why there's a lot of different viewpoints, not only at the Fed, but throughout Wall Street. All the strategists and economists really have different viewpoints when it comes to where the Fed is going, not just the end of this year, but into 2026 as well. So this will be a significant turning point when it comes to those future forecasts, because it gives us a clue into what Powell and company are thinking.
Kenny, I wake up at the crack of dawn today, getting an alert that Baidu is ripping higher. You got the Hang Seng Tech Index trading at levels it hasn't traded at since November 2021. All really been being driven by a new wave, or next wave of AI enthusiasm. By the time I got to my desk this morning, Kenny, I'm like, this is all one big gigantic bubble, and it's going to end badly.
Well, I'm not so sure it's a bubble at all. I think we're very much in the infancy stages of AI, right? And where it's going to take us. I mean, look at the speed at which it changes from just 6 months ago to where it is now. Now you're talking about agentic AI and quantum computing and the role that that's going to take. So I'm not necessarily sure it's going to be a bubble that bursts. It might be, again, we're a little bit stretched, so you might just see some pullback. But I don't think when you say it's a bubble that's bursting, people are going to think it's going to be like the dot-com crisis of 1999, 2000. I don't think that's it at all. I think they're two very different scenarios. But could we see the market back off? 100%, because I think it's ahead of itself. But I just want to say one more thing to your prior question, Ali. Peter Navarro came out today and said, and he speaks for the president, he wants 50 now and he wants 50 in October. So that must be what Donald Trump wants. And you can
Peter must think we're in a crisis here, Kenny.
That's what it's going to be.
The 250 jumbo point rate cuts, I mean, I think market would take it as a signal the economy's about to fall off a cliff.
100%. It would suggest we're on fire, we're panicking. 100% he should not do it. But that's what Navarro said this morning. And I think he's speaking. Look, he's the mouthpiece right now, right? And if he doesn't get if that's not what we get, you can expect Trump's going to take the Truth Social and say, late Powell again. That's what he's going to do. But I don't think the market wants that, to your point.
Peter, I know you're an avid watcher of opening bid. More than welcome on to talk about this cut or your call here. And let me get over to you. I had an interesting chat staying on the administration with Eric Trump inside Trump Tower yesterday on all things crypto. And what I didn't appreciate talking to him is, how much the international investor has gotten involved in crypto. And it's one thing to see it on a press release from BlackRock, we're getting into Bitcoin ETFs or whatever it is, but it's another completely different thing to hear from a crypto insider like Eric Trump saying, really, every person I know is trying to buy Bitcoin. You were at a conference too, I believe yesterday on crypto and what, tokenization?
Tokenization, real world assets. Look, tokenization is accelerating. So this means that real world assets are going on chain. Things like gold, bonds, equities. And you started to see this really with stable coins. Now it's moving into equities, and this tokenization trend is accelerating. And part of the reason why you also saw the NASDAQ last week asking the SEC for permission to offer tokenized stocks, tokenized securities on its exchange is because the NASDAQ is seeing that the entire infrastructure, the financial infrastructure, is eventually migrating on chain, on blockchain. So this is what everyone that I spoke to at the conference is seeing, that you are going to eventually see 100% of the financial system moving on chain. So the goal is eventually, for example, to have Tesla shares on chain. That means that they are issued on blockchain. Apple, Amazon. And the benefit of this is that they can be traded more easily. They can be accessed from all over the world. You've got a larger pool of investors that you are able to fractionalize them. There's so many benefits, settlement times, there's so many benefits of having tokenization. It's not going to be overnight, but definitely this is where Wall Street sees things going. And this is why you see the heavyweights being interested in blockchain and going into the tokenization world. And one other point, that private companies are also looking at tokenizing their equities, because this is a way for them to tap money from that sector as well. So they will be able to imagine, you don't have to necessarily list your IPO on the stock exchange or NYSE, on NYSE or the NASDAQ, but you could possibly do an IPO on chain. I mean, it's pretty revolutionary what you're talking about.
That's some great context. Kenny, are you a big Bitcoin believer? I think Eric has been out there suggesting that Bitcoin could reach $1 million. You on board with a call like that?
I love that, especially like when people say, the Dow's going to hit 50,000. Yeah, at some point it will, right? I am a believer in Bitcoin. I own Bitcoin. It's appropriate for me. It's about 2% of my portfolio. I don't let it get bigger, but I'm also 64. If I were 30,
you're not 64. Come on, you're not 64, Kenny.
Right?
You're not 64.
But I like Bitcoin. I like the crypto story. I like having exposure. I have exposure to both Bitcoin and Ethereum. I don't do Solana and Dogecoin and all the others. I stick to where I think the focus is, and the focus I think right now is Bitcoin and Ethereum. So while I'm not sure it's going to $1 million. I mean, it might. I like the idea, and I think that investors should have some exposure. Again, depending on where you are in the life cycle is going to dictate what your exposure is.
Good. Stay away from that Dogecoin. I appreciate this stuff. Good analysis, guys. From the opening bid roundtable, Kenny Polcari, always good to see you, man. Ali Canal and Inez Ferre, good to see you as well. Straight ahead on opening bid, a big call on gold out of Deutsche Bank, and we talked to the former chair of the Council of Economic Advisors to get a true snapshot of the U.S. economy. Stick around. Welcome back to Opening Bid. Deutsche Bank is staying bullish on gold despite an almost 40% surge this year. Strategist Michael Hsueh released a $4,000 per target for the price of gold in 2026 this morning. Says Hsueh, quote, "We believe that the FX and rates environment remain conducive to further upside for gold, while positioning indicators are not stretched. Although gold is screened as rich versus fair value, we think much of this is due to the strength of official demand, which we expect to persist." Okay, the Fed's decision on interest rates today comes at an interesting time for the U.S. economy. On one hand, labor market data has been underwhelming. JP Morgan CEO Jamie Dimon said this month the economy is weakening. On the more upbeat side of the equation, tech companies are plowing billions of dollars into the economy to build out AI infrastructure, and the Trump administration has loosened up regulations, especially in crypto, to unleash more economic prosperity. This has the stock market continuing to touch fresh record highs. So my question of the day is this. Being as clear-eyed as possible, what is the real state of the U.S. economy right now? Tomas Philipson is the former head of the Council of Economic Advisors, initially appointed to the CEA in 2017 by President Trump. Tomas, really nice to see you here this morning. Thanks for hopping on. I'll put that question to you. Given all the variables you study in the economy, how do you see the strength or lack thereof of the economy at this point?
Yeah, I want to look sort of differentiate between backward and forward-looking indicators. So backward, we're obviously slowing down in the labor market. Forward, like you mentioned, CapEx, which is a forward-looking indicator, obviously people are investing for the future, has boomed quite a bit. Also, markets are on fire, which is forward-looking as well. So if you look at GDP, the labor market is slowing, but GDP obviously came in at 3.3 last quarter. Atlanta GDP now, or Atlanta Fed is basically predicting a 3 plus GDP for the next quarter. So it's kind of a productivity boom that's going on, slowing in labor markets, increased in GDP that could be related potentially already to AI, raising productivity. But that's certainly good news for wages, because wages are linked obviously to higher productivity. And we see that in the retail numbers that just came out this week, I think, where the upper end of the income distribution, 10% are spending half of retail in terms of the growth. So I think that there's a contrast between labor markets and GDP that's really being a productivity story emerging. That's kind of interesting. And I think sooner or later it's going to be some connection with all the AI investments that's taking place.
Tomas, I'm glad you brought up the stock market, because so many economists won't necessarily touch that rail of stocks, but since you did, markets are often said to price things in on the economy, 6 months in advance. Then how do you think the first half of 2026 looks like for this economy? Do we get a labor market back in reacceleration mode, for example?
Yeah, I think so, because there was a lot of churn with uncertainty. Trump, he tried to reset our trading relationship with foreign countries. By definition, if you reset that trading relationship, people don't know what the reset is going to look like. People now have a lot more clarity on that, so the uncertainty that hammered the market is sort of gone now, and you have the big beautiful bill coming in with a lot of growth enhancing stimulus in there. So certainly the future of 2025 and early 26 looks a lot more optimistic in my view than the first half of 2025, which basically was a reset or was a lot of churn due to the uncertainty of this reset.
This, of course, is Fed decision day, Thomas. We just had Senator Elizabeth Warren on, and she was talking to the Fed. I want you to check out this clip, and I'd love to get your reaction on the other side.
I think there's something important to underline here, and that is the chairman of the Federal Reserve said last month that the Fed would have lowered interest rates last February if only Donald Trump had not created so much economic chaos.
My question for you, Thomas, is Jerome Powell and the Fed, in fact, too late to prevent a sharper economic slowdown in the near term? Even if they do come out here, cut rates by 25 basis points and signal 2 more rate cuts are in the cards for this year.
I don't think we have a slowdown coming up, like I said, for all the reasons I mentioned. And I think the Fed is very, very confused on tariffs, which I don't fully understand. Tariffs are not inflationary. Fiscal and monetary policy is. So the Fed was partly responsible for the 9% inflation we saw in 22 because of the easing of the money supply. But tariffs are taxes on companies, and they're not inflationary. They might be passed on somewhat to consumers, but people can spend more on everything. Inflation has to do with economy-wide price increases, not industry-specific price increases, which is what tariffs might generate essentially. And also the magnitude. If the tariff revenue is $200 or $300 billion, that's tiny relative to 2/3 of the economy, 20 trillion or whatever. That is consumption. So it's 1% of consumption we're talking about, not all of which gets passed on to consumers. The producers eat some of that, whether it's foreign or domestic. So not all of that 200 or 300 billion gets pushed on to higher prices as consumers. So even if there was some price increases from tariffs, it's tiny relative to overall consumption, which is what CPI is measuring. It's overall consumption prices. So the magnitudes are off. So I think the Fed has been very non-transparent on why they think this is an issue. And that's part of the reason why I think the White House is very, very frustrated with the Fed. They come up with these decisions and they have no way of communicating why they're coming out with them.
Why do you think they have been confused?
I don't know. I mean, I think it's, the press, the business press is equally confused. I mean, it's like a tariff hysteria in terms of inflation, even though we have rising tariffs in 2025 so far, but in decreasing inflation since 2025, over 2025. A little bit of uptick lately, but if you look at 25 alone, the inflation is coming down, tariffs is going up. I think it's been politically driven. If Biden had done this, it wouldn't be so much talk about tariffs.
Lastly, what's your best hope for the next Fed chair, Thomas? What would make an ideal candidate to replace Jay Powell?
I think an ideal my favorite is Kevin Hassett for sure, because I think he would be the best translator between what the Fed research does and the decisions they make. Again, coming back to the transparency, essentially. I think he would be ideal in making the Fed more transparent. He would understand economic research better than anyone, and he would also he's also very good communicator with the press, as you see him on TV pretty much every day, essentially. So I think he would be the ideal in my view.
Yeah, we've always enjoyed our chats with Kevin. Very, very knowledgeable in all things economy, to say the very least. Tomas Philipson, also very knowledgeable in the economy. Thanks for hopping on this morning. We appreciate it.
Thank you.
All right, coming up, Julie Hyman has you covered from Market Catalyst. She will be speaking with the CEO of StubHub on that company's big IPO today. Maybe she'll talk about some concerts, too. We'll be right back.